Heffernan, EndoTech, streaming live exclusively for the Pareto network, Pareto token holders, soon to be way more exclusive. And I will be bringing the opening here on YouTube and on Twitter, and then heading over to finish the show at EndoTech.io. And that's where you're going to consume this show, this content, and my thoughts and opinions on the price action in particular of blockchain assets and the ones that we are paying close attention to. So that's the way it's going to be. Good morning in Asia. The Asians just getting after it as it's morning there. This is Blockchain Vitals. That's the name of the sheet. That's the name of the show. And pretty much a strict technician I am in the matrix. I still trade in the fiat world, commodities, and I apply the same technical approach and outlook to crypto assets as I do in the fiat world, because over the long haul, they have proved to me to be the most effective, especially to keep me out of trouble. All right, and let's do the rounds first, because a couple of things in the rounds here today, or one in particular that I think is driving some of this market action. And at that EndoTech.io website there, market sentiment is right there on the left-hand side, and we are calling the the Twittersphere too, but the whole ecosystem of blockchain stories and bringing ones forth that are, by our standards, the most influential. And that second story you saw there, Neil Kashkarian, Minneapolis Fed chairman, ripping cryptos as a place where there's so much more scamming going on than actual value building. That was his take anyway. And I can't imagine that helped the market. The market has been looking like, for a better term, looking like dog shit for a while. But these statements can't help the market. But we've talked about it for a while now, that any of these tokens or currencies have to fulfill a need, have to have a value added, and when they don't, and when the public decides, and the investing public in them decides that they don't, it's going to be a mass exodus for the door. But that price action is evident on the charts, and you can definitely protect yourself by knowing what those technical setups mean. All right. So right now, again, not looking good. I am on the sidelines and have been for a while. I will tell you, though, that I don't mind jumping in a few places here just to see how the market reacts. And let's talk about them. A couple of them are fairly close here. So let's take the vitals. Taking the vitals, a little segment we do every day. And that vital sheet gives you a pretty good snapshot of the relative health and or sickness of any of the top 8 by market cap cryptocurrencies that we are tracking. I'll talk today Bitcoin and Ethereum. Bitcoin right now trading just above 8,000, 8,007 to 16, jumping around there. For sure below its value range low, 81.47 to 82.88, Bitcoin's value range. And now in lower momentum on the daily, all right? Lower momentum on the daily. The thing on the chart that jumps out at me, though, in Bitcoin is that lower momentum level that we talked about on the weekly, 86.95, 76.95. Lower momentum Bitcoin on the weekly. And 76.63 is the 50-week moving average. So many of these cryptocurrencies, you don't have a 50-week moving average that you can work from. They're just not there's not that much price action. But Bitcoin you do. And a 50-week moving average is a physical number, 76.63. Low momentum on the weekly, 76.95. somewhere in there, I think you got to take a stab. I'm going to take a stab. You can do whatever you want. All right. I'm going to take a stab at buying some Bitcoin there and seeing how the market reacts against that number. If it just can't hold it, if it doesn't build a bottom and it just continues to deteriorate, I don't mind, jumping out and taking a little lick there, no problem. But those are two big areas, longer term technical areas that longer term traders will definitely be taking a look at to employ some funds. So that's Bitcoin and Ethereum right now trading 647. Again, well below its value range, 671 to 697. Now currently in lower momentum on the daily also, 679. And I'm kind of looking in Ethereum at that the weekly average coming in at 628, and the 50-day moving average Ethereum 618. Got a little congregation there of a couple of good long-term numbers, and not a bad place to take a stab. And again, you're looking at areas to participate where the market should react off of these levels. If there's longer-term buyers coming in to invest in the market, you should see some volume pick up. You should see a bottom develop there. If it can't hold it there, if there's more sellers that are saying this story is not over yet, then you monitor it and get out of the position. All right, you don't need to marry these positions. For me, longer term in Ethereum, that 492 level, I just really like that level. 492 in Ethereum, that's lower momentum on the weekly, and it's an area where this market has made lots of tops and bottoms around that 490 to 510 area on the weekly chart. So I really like that area. I will definitely save some bullets. Obviously, I'm not going to put everything out in Bitcoin and Ethereum at this level because the other thing you have to understand in these cryptos is sometimes they move so fast. And this happened in commodities too, by the way, as things went electronic and these markets become way more vertical. You need to put orders in because things go bananas in an electronic trading environment. An electronic trading module can become way more, let's say, out of control than any human in any trading pit ever could. The market in an electronic framework can just reach for bids and just move percentages where a person executing an order would just never offer something percentages lower because that's where the next bid was. But that's what an electronic environment has against it, I think, is there's not a lot of logic in that engine when it's just looking to fill an order, especially when stops start getting tripped. That's why you have flash crashes, because the electronic engine doesn't know any better. All right, the worst order filler on the planet on a trading floor was not as bad as a fast market electronically, where the machine just says, "Where's the next bid?" and I'll hit it. So that's what I'm looking at, strictly from a technical trading technician's point of view. I try to keep it simple, man. I don't have a ton of lines drawn on my charts. I don't have a ton of systems working. Over the years, I've figured out that, the simpler the better, but defined risk and multiple entrance points when things get bananas is a really good approach to take. And longer term charts versus shorter term charts if you're investing versus trading. All right. That's the show. You guys stay patient. These things will find a bottom. Believe me, they'll find a bottom. And I don't think the story on the rally for 2018 is over yet. But right now, you got to pick your places to participate and be ready to find the exit and exit the trade. There's no reward to be in something and watch it move 80% against you, and then if it by chance does come back your way, and I mean that is not exquisite trading. All right, that is not exquisite trading. So stay disciplined. hone your system for the long haul, and decide whether you're a day trader, which the blockchain vital sheets gives you great day trading areas, or if you're an investor, and those are two different mind frames that you're going to bring to your trade setup. All right, man, have a great day, and we will see you tomorrow.